Carolyn Capalbo with CMG Home Loans here. I just wanted to talk about what makes up your credit score. I get a lot of folks asking me for help with credit and what tips that they can have. And up front, I'm going to say I'm not a credit agency or a credit repair agency, but from our observations and from working in the industry for a long time, I do know some things that you can do to help assist with keeping your credit score up and improving your credit score and not damaging your credit score. So what makes up your credit score? 35% of your credit score is your payment history. Late payments just really derail your credit. So paying on time is paramount. Never skip a payment and always pay on time. The second largest component is actually surprising for many people is credit usage, the amount owed, and that takes up 30% of your credit score. So think about if you have a credit limit of $1,000 and you keep that balance at $800, you're really hurting your credit score because the credit bureaus look at credit usage and you're keeping yourself way up there near your debt limit, even if you pay on time. So, excuse me, my recommendation is to keep that balance low. Ideally pay it down to zero every month, but keep it under 30% of your credit limits, and this will help your score. New accounts and keeping the length of the accounts accounts for about 15% of your credit score. So too many credit cards opened in 1 month is going to impact your credit. But ironically, if you're shopping for a car or a mortgage, a couple of inquiries are not going to impact your credit. But also, you'll hear people say, well, if you pay an account down to zero, don't close it. And they're right, because the length of the account, the age of the account is part of this 15% of your credit score. So keep old accounts, maybe you zero them out, don't use that credit card, but having that account for a long time will help boost your credit as well. And then 10% goes into types of credit. Having a variety of credit actually can help boost your score, such as a mortgage, some student loans, installment, car payment, credit card, having a mixture, not just one type of credit. Like if you were only credit cards versus a mixture of other things, there's a 10% component in the credit score. And then that length of history, 10%, we want to see that credit be out there for a long time. So you get points, if you would, for maintaining and having good credit over time. So again, this is just a little guidance here. The biggest aha for most people is about the balance and keeping that balance low, below 30% ideally on your credit usage. And that seems to help bring credit scores up. Anyway, if you have questions or want to dive deeper, give me a call. I'm always happy to talk. See ya.